Welcome to Telltales. I'm Mike Nicoletti. Every week, along with my co-hosts Jason Wallace and Hunt Lawrence, we bring you the Cash Flow Memo. Get it at telltales.us. For the next 30 minutes, we're going to dive deep into energy, technology, and healthcare. So download the memo now and get started.
The following conversation is intended for informational purposes only. You should always do your own work to determine if an investment is suitable for you.
Exhibit C, Exhibit A, B, and C, only 5 minutes, please. So we're in person. So Mike and Jason will con me if I go even into the 6 minute. Exhibit C, of course, is about Iran. And despite the announcement, I don't think that much has changed. I think the supply and demand numbers on Exhibit C check out pretty well with other people who put out supply and demand numbers. I think that we've consistently said since the first Wednesday in March that we didn't think $150 oil would happen. We thought that range was going to be higher. There's going to be a lot of backwardation. I would say what's going to happen now is there'll be less backwardation rather than, I guess, the backwardation get up to $20 or something. In other words, the difference between the current price and the price 12 months from now, I think it'll now go down. It'll wind up being under $10. If you hold companies that do better when oil prices are higher, remember at the beginning of this, whatever we're calling it, war, military event, or whatever we're calling it, oil was 60 on its way to 50, and now oil's 80 on its way to 70. That's much better for an oil producer. If you turn to Exhibit B and you go to the pricing last Thursday, there was already an anticipation that there'd be an announcement, and you can see the backwardation is less, kept down to around $11 or $12 or so. Gas has been a casualty of the high oil prices, and in an odd kind of way, as oil prices come down, I think gas prices will come up, not a lot, but in this forecast on Exhibit B, we have gas averaging $3.50 in 26 and then $3.50 again in 27, having averaged $3.60 in 25. So, I mean, in a commodity market, that's now granted, it's an average. You're going to have a lot more volatility within the year, but that's pretty stable. Exhibit A, there was some publicity this week on the Social Security Trust Fund. Something is going to trip off the issue that our expenditures are too high. And I don't know whether it's going to be that or a problem. We've spoken in prior Wednesdays, a problem in the repo market, which seems to happen fairly often. I was just a little late getting down and joined Mike and Jason because I was listening to that commentary after Kevin Warsh, the new Reserve Head's first press conference. There's no question, he's appointing task forces, and he has like 5 different topics. One of the topics is the Fed balance sheet. And so that's something else that he's very outspoken on, that the Fed balance sheet shouldn't be 6.5 or 7 trillion or whatever it is in a $31 trillion GNP. It should be 1.5 or something. So imagine that number coming down by $750 billion a year, the deficit of 1.5 or 1.6 or something. That's a heck of a lot of paper for the Fed to raise every week, every month. Now, will interest rates are already reasonably high. In terms of the Fed funds rate, they didn't do anything. They just left it, but they said the bias is possibly to an increase. So that was basically I encourage everyone to at least get more familiar with the new Fed Reserve Head. I think listening to his press conference, which is admirably shorter. They had a shorter statement and a shorter press conference. So all that's still positive. I think we're within 5 minutes.
On the dot.
We've been doing these the last couple of Wednesdays where we've had special topics. And I think just a review of how the companies, especially on the front part of our 20-page memo, are doing this kind of warning. Apple had their conference, not that much positive coming out of their conference, I don't think. I'm looking at Jason, who's our head of our Apple bear.
It didn't excite me. One new announcement is they're going to create the long rumored foldable iPhone and then they're going to have AirPods with cameras in them. So they are leaning into the AI product category more, especially with the AirPods. So in theory, you could interact solely with your AirPod. It has a view of the world around you, and your iPhone can stay in your pocket. That could be interesting, but it's also a product that I don't believe comes out until 2028.
Right.
It still looks like they're way behind.
Right.
Yeah.
On that note, as far as wearable tech, Snap just released their new AR, VR, I guess they're VR glasses.
They aren't, well, so they're technically augmented reality because they're glasses you can see through. But I had a chance to experience not an early version of it, but something similar. And it really takes your focus from both of your eyes onto whatever is displayed. So you really feel like you're in a virtual environment, even though you can shift focus and see through them, and they're semi-transparent when they're on. So it was kind of an interesting takeaway that you don't need goggles. In my opinion, you don't need full goggles to have a VR experience. You just need to convince your brain that it can only focus on the thing right in front of it.
Irrespective of price, if one or both of you are going out to get a set of glasses, who gets the nod? China has glasses. It's glasses.
You know, I think today the best product is the Meta glasses that just do audio. I haven't seen the Snap ones like Jason has, but the Meta ones with the video screen built into it, it like kind of hurts your eyes. Like it doesn't feel like something you want to wear every day. The audio only ones are actually very nice because you don't have to wear earbuds in your ears. People around you don't hear, and I guess you could do some stuff.
So you just get glasses to your prescription, and
exactly.
maybe a little chat if you don't like.
We had a friend,
but you don't. In effect, they take the place of things in your ear.
I got to experience them when Vitaly came to San Diego and went sailing. So he was wearing them, and he took a video, and then afterwards he sent the video to hold us. And it takes a very nice video.
Right.
Yeah. Anyways,
Which product is that?
that's Meta.
Amazon. Why is Amazon complaining about Anthropic, the new Claude programs? Apparently, the Amazon CEO called up, I don't know, Scott Bessett or someone in the administration, and said, I don't think he said you better slap an export ban on this, but that's what happened. Why would Amazon, as a large stockholder in Anthropic, is this public spirited or what other interpretation would you put on that?
I don't really have an opinion on why they did it.
Oh, I've got a strong opinion.
Well, let's just give a little background because we've talked about it. We've talked about it in prior Wednesdays.
Yeah.
Anthropic, let's see and then you guys can fill it. Anthropic came up with a new program, which they thought was very powerful. And they decided they were just going to release it to like 40 people. So amongst the 40 people, it'd be like big banks like JP Morgan. And the reason they did that and limited it is they thought it would be in the hands of a hacker able to find flaws in code that everyone was using. Sent their statement of
that's accurate. Yeah.
And it's very good at it.
Yeah. And they played up that it was so powerful. It was maybe the artificial general intelligence finally here.
And then market research, one of the prominent people in the tech industry said, no, that's just baloney. We don't have the compute to have people run this. So that's why they...
Right.
What do you think of market research position? Do you think there's some logic to that?
Oh, I definitely think there's some logic to that. Yeah.
And in the meantime, right after that, we heard that Anthropic was spending $15 million a year to rent the compute in Memphis that I was giving up apparently because they hadn't been able to get the applications that Claude was able to. And instead, all this is happening, everyone says, everything happens quickly. Well, this is really happening quickly because then we heard that SpaceX was subject to being public. It's going to acquire Cursor, which closed yesterday.
Yeah.
talk about Whirly Dervish. So that gives background for all this. So but why does Andrew Jassy, Jeff Bezos' successor, Paul whomever, have the administration? So
Amazon runs the largest hyperscaler. There's a lot of software running on Amazon, and they actually have a very clean cybersecurity track record. So
yeah, more clean than Missouri.
yeah, more clean than any hyperscaler for sure.
How about Google?
Would probably be similar.
Right.
They just don't have that many customers.
Right.
So if you're Andy Jassy, this is a risk.
Right.
So it's not surprising to say, okay, we're going to run this up fivefold. Because if you didn't and you knew the risk, it would come back around to you in a really negative way.
It would be hard to imagine that Amazon AWS had to be one of the 40 or so.
Oh, they must have been.
They must have been.
Yeah.
Yeah.
Oh, yeah.
Oh, is there,
Google.
either they know that they have not patched all the holes, or
Well, that was remember they released it. They released it.
for a day. Yeah.
Yeah, for a day, for 2 days, because they went from we're not going to release it to releasing hopefully somewhat safer
The
version.
guardrail.
Guardrails.
Well, that's exactly. They put the
guardrails in like only 2 days.
Well, that's what Amazon was able to do, is they basically showed that you could jailbreak the Fable version, which is the guard.
What is jailbreak mean? You get off the guard.
Get it to do what it's not supposed to do.
Okay.
This has been going on since the first version of ChatGPT.
Yeah.
And you've been able to do this at every time.
It's modern day hacking. People would hack websites, hack systems for fun.
Right.
Now it's, can you break these models and do things that their creators did not want you to do with them? So
I think Anthropic convinced everyone successfully that this was such a powerful piece of software. It's a weapon, and it should be rolled out to just those 40 entities initially, so that they can patch the security holes.
Then set it up more broadly.
Right. Then they put it out broadly, and then just like every other version, you can get around the guardrails. And if you can get around the guardrails, it becomes a weapon again. So I think they got exactly what they asked for when being shut down.
in a way, like their whole.
Now, what does an export control do for this?
So that's how the U.S. regulates weapons exports or inputs that could be, built into weapons. So they have the regulatory authority to not allow you to send that outside the country.
But
Which is like, I
but
think
we're
we're
talking about something up with the ether.
right. Yeah.
But you could ask it to make a chemical weapon, and it'll give me the instructions to build.
I know that. I just wonder how realistic.
Or break into a electric grid operator.
If Tencent or Alibaba really wants it, presumably they'll get it somehow.
Yeah.
And they're considered to be somehow an extension of the Chinese government, each one of them. So, or at least heavily influenced by the CCP.
Right. So they're at most a year behind. When a model's released, they can duplicate the capabilities just one step behind. So if this models ever does become publicly available, they're going to have the capability in months.
That they've implemented some controls to try to prevent distillation. So what it's called when you use enough prompts and responses from another model to train your model. But yeah, it's an unsolved problem. And now you have a well-funded potential competitor.
Okay, well, I can tie into what we were doing last week, which is one of SpaceX worries. And of course, it came public at the announced price that went up 30%. SpaceX had profits, and the satellite business is clearly profitable. The Lyft business, as you guys went through, is profitable. I mean, they do it for less and be profitable.
Yeah.
I have no idea about data centers in space. That's something else. But at least two of them, and they appeared, I checked, have only $28 billion invested in Memphis, $1 billion in revenue a year. Now, it's not a term contract. I think both contracts are quarter by quarter. But still, it's a 1-year payout on big, large capital items. So all that's profitable. And so now Anthropic's going to come public, and then soon after that, OpenAI. There's no profits there. I mean, there was an article in the paper on OpenAI. I mean, really no profits there. I mean, maybe possibility of something Anthropic how are we supposed to think about that as investors? Because the cost, granted, Anthropic has this revenue growth, spectacular, but how do you make money around the revenue growth if you're paying all this money for computers?
It's going to be tough.
Yeah.
It's a J curve like any other investment cycle.
Right.
The question that you have very limited financial information from OpenAI or Anthropic, but at some point the belief is that they will generate free cash flow, as we saw through the COVID era. And this was the same case with a lot of software companies. They were burning a lot of money, granting a lot of stock. Some of them have come through, not all of them. Most of them haven't.
Yeah. What I've been wondering is, will we see the end to the subsidized token era where there's cheap tokens? And kind of the analogy I've been thinking about is when Uber and Lyft went public.
Yeah.
When they were fully funded by VCs, I could take an Uber anywhere around town for $5 or $6. It almost made no sense to have a car at that point.
Right.
They went public and the rates tripled or quadrupled.
Right.
So
Software is threatened by language models. So we might as well talk about Microsoft if we're going to talk about software. Now, as I understand, a risk with Microsoft is they basically sell it by the seat, right? And maybe a bit less seats needed. I know the two of you are kind of positive about Microsoft. I think they can sell off is probably overdone because, and maybe you don't want someone sitting in a seat that doesn't have access to Microsoft Office. I mean, maybe it's just that simple.
That's the bet that Microsoft's making, is that every employer will want every worker to have agents working for them. For Microsoft, which is a very slow moving business in general, and their customers are even slower moving, this is probably the best strategy that makes sense for them. They're not going to reinvent the whole corporate way everything works. Companies aren't ready for that. There will be different companies that will come in with completely different org structures, agent first or AI first businesses. Those are being funded right now in startups. But I think for Microsoft, this makes a lot of sense. In the same way that Jason and I use a lot of AI and burn a lot of tokens, I think your average employee at a company will do the same. And the billing model that companies prefer is fixed price per seat. So they need to strike a balance between a fixed price per seat plus the ability to charge extra when the usage is very high. So,
and another fear is job displacement. It's too early to call whether that shows up or not, but the job market got really weak for software engineers where these tools are most effective at the earliest stage. But I think that was just a function of extreme overhiring during the early COVID years.
Mm-hmm.
And past that, now we're seeing software engineer job openings increase. So we're still not seeing the decline there.
Right.
We've been about some smaller businesses, and pretty much everybody wants to find somebody that can help them implement AI in their business. So there's actually a massive shortage of people that really know their stuff as far as how to implement any of this.
I think Salesforce are cheap.
Mm-hmm.
The bench too. And I have it at 18 times free cash flow. I mean, ServiceNow is much more expensive, more than 50 times free cash flow. Snowflake, I still don't see much free cash flow in Snowflake. But is it just they're the ones that are there first and a little more vulnerable? Or?
So Salesforce, so Salesforce and ServiceNow are both systems of record. So they're the kind of core operational software that businesses have. Salesforce was the first real cloud-based software company. And as a result, they own their own data centers.
Nice.
There is something that is being realized now is that you're going to want, at least the belief is, you will want your system of record and your AI model together. So I think that Salesforce will have to deploy GPUs in their data centers.
So you get more capital.
So it will likely get more CapEx. I mean, they don't spend anything on CapEx right now, but they will likely have to. ServiceNow, I believe, runs most of theirs on AWS.
I believe so.
Which puts them in a pretty good position just to be able to rent, not buy.
Right.
Snowflake is interesting as well. They still spend too much money on share-based compensation, but they are seeing a lot of additional workloads. Again, similarly, they act as an intermediary between the hyperscalers, and for the most important data, people will run that on Snowflake.
And they are a system of record.
Right. So sort of a more modern step in the process, and they're all consumption-based revenue.
At the beginning of the year, they released an AI product. So I believe it runs all of the top models, but it sits on top of it's essentially a chat application, I think, that sits on top of your enterprise data in Snowflake. And they're seeing a big ramp up in early adoption there.
And
Yeah, it's one of their big things is you have to move data.
I would say you saw a big lift in revenue in the last quarter.
Yeah.
Or something.
Yeah.
People.
Yeah, and the net revenue retention started increasing again. That's been coming down, it's harder to maintain such a high level of things.
And the other two companies on page 2, we have discussed this, are software companies. And Oracle's kind of going all in on building. So the software is kind of almost irrelevant, kind of yesterday's business. And they can say the same for Broadcom, a big software component in it. But, they're the ones who help Google and Amazon build their alternatives to GPU, right?
Yeah.
NVIDIA had $5 trillion. I mean, SpaceX is now caught up with Amazon, but do you think?
Yes, the SpaceX.
Do you think the SpaceX advocates that we want to be the most valuable company? Somehow we're going to get there against a company with $160 billion of free cash flow, which I think is a record. I don't think Apple ever got that high.
And we think NVIDIA is going to be.
We think that free cash flow is probably going to 200.
Yeah, 200 to 250 by the end of the year, maybe, on a run rate basis. So,
what happens? I mean, is this company? It's turning into a value stock.
Yeah.
Is this company just going to get the 200, 250, and then kind of spend the next 5 years there until something else happens? Or what does Mr. Jensen want and plan for us all?
well, he's locked up the supply chain. He's got the best product.
Based at TSMC.
Mm-hmm.
But more than that, right? We have all kinds of other stuff.
Deals with the memory makers. Yep.
For the next generation of servers, there's optical interconnects.
Yep.
They've locked up a lot of that. They have the ability to be more farsighted than anyone else.
Uh-huh.
It's hard to see why they're valued at a lower multiple than the less good companies that are trying to do similar.
I mean,
things.
the one that I would put in that category because they have so many bases covered is Google.
Mm-hmm.
Yeah. But it looks like Apple's lacking ability to cope with the language models.
Yeah.
Microsoft maybe has some vulnerability on the per seat. Amazon is, and you got the big retail component, which you're guiding around. And Azure was making some progress against Google. I mean, they certainly have lost some market share in their business.
And where does the incremental budget growth come from that is buying NVIDIA chips beyond next year? I mean, I can't remember off the top of my head the percentage of GDP that's being spent on AI data centers now, but it's that real road.
More or less $1 trillion, and their GMP is 32, so it's 50%.
Yeah. And how much more can that grow?
Yeah, we're into the law of large numbers.
Yeah. What else could you sell them?
Well, think about it. NVIDIA has gone from selling server and now to a rack to a whole row.
Now,
They're moving towards full reference data center design.
Yeah.
They're selling CPUs. So they're going after an x86, apparently successfully. Do you believe their metrics that their latest CPU is twice as fast as an x86 CPU on the market?
Right.
So it seems like they're going to go after the existing CPU data center market.
Right.
That's not AI.
Right. Right.
And I think they have some legs there. The hyperscalers have moved past x86, probably starting 10 years ago.
Right.
So if you're going to build a data center and you're not a hyperscaler, it would make sense to get on that same hardware.
Well, probably if you want to build your own cloud, for whatever reason, you don't want your data on AWS or Azure, and NVIDIA will come in and do that for you,
Right.
and done it for you. Right. Some people, that gives us a chance since we're only got 5 or 6 or 7 minutes left, and we've got to do some healthcare. Let's just take the most successful large healthcare company out there, Lilly, which, it's not just the weight loss medicine. They just seem to have progress on 3 or 4 steps. It's really very impressive. Suppose Lilly just decides consolidating on AWS or Azure is not something they want to do, and they just call in NVIDIA and say, what will it cost to just put together a system where we will be absolutely sure that none of our intellectual property can escape, and basically manage it for us. And we understand there's going to be a regular amount per year that's going to have to be fitted into these systems, because we don't want our scientists to have anything less than the latest capability.
Mm-hmm.
I mean, Lilly is a big company. I mean, that might be what else, $5 billion a year of free cash flow for NVIDIA. If you took on a job like that for 5 is. It's a lot, but there's more. They're more large. I mean, I can tell you in the oil and gas industry, of Exxon or Chevron, if the NVIDIA salesman said, "Oh, hey, we're selling this to Lilly, we could probably do it for you," it'd be very tempting. Everyone feels like, first of all, they have enormous amounts of information, and second of all, that information is much more valuable if you can use the language models on it. I mean, what would take a week? We didn't talk now. Citadel, I think, has made a deal with Google. Google hosts all their. Mm-hmm. Do you think you mentioned stocks or types of trading strategies and whatnot? Yeah, and Citadel has enough technical capability to account for 25% of all stock trading bodies. So, if they're willing to trust Google at that stuff, which I think they have done, as compared to doing it themselves. But what would cause Citadel to say, wait a minute, I've got, I mean, it could be a cost thing. NVIDIA could come in and say, I'll do it for less. Mm-hmm. And I'll set it up and less than Google. That might be hard to do.
It might be hard to do.
Yeah.
Yeah, I think Citadel being, the pod style manager and their holding period being somewhere between like a week and maybe 8 weeks, it's not the same as maybe somebody that trades much more frequently, the high speed traders. In that case, you would have a lot of your own hardware, but for Citadel, Google's a perfect solution.
Yeah, I'm looking at Lilly on page 19, and it's a large company. Its cash flow is around 20. If you were made a deal with NVIDIA that was worth $5 billion to NVIDIA, that's a pretty big chunk of your free cash flow.
It would be.
But if you're NVIDIA, that's what you do. You got to hunt the ones that have free cash flow. And it's, this stuff is really having an impact on the life sciences markets all the way through the stack, whether it's in drug development, design.
Yeah, I think including the regulatory.
Definitely.
One thing we didn't talk about, though, not healthcare related, but back on the Anthropic Fable model, is Microsoft removed the ability to use the Anthropic cloud models from their employees. And it was really interesting. I don't believe they said why at the time. And it seemed very odd, like a very odd decision. But when they did release Fable for those day or two, part of the terms of using it was Anthropic got to capture all of your prompts and store them. And that was in the terms of service. And if you're writing code at Microsoft, then you already have a deal where they're not going to, they're going to protect your data. And then this is a change of terms. Part of your prompt is the code base that you put in. So Anthropic was essentially asking their customers, including Microsoft, that we will store all of the code that you're writing and keep it for ourselves and do training on it. Mm-hmm. So I think that was a big change in changing the deal that Anthropic's made with all of their users. And it's really a breach of trust, in my opinion. And I think that's why there is a lot of pushback at their largest customers for it.
The business logic of doing it seems like kind of an outrageous thing to ask for.
Well, Mike's statement reminded me of it because your proprietary data is more valuable than ever. And all of these companies have trained on every bit of data freely available on the internet. So it really does seem like an overreach where they're trying to get into your proprietary data now and use that for additional training.
Yeah. And if you're Citadel and they're using Google, because you just think, well, Google, we can't possibly hire the people to provide the kind of capability Google can provide. Google can assure Citadel that it's completely walled off, that the clones, we might be using clone models based on how collector prompts, but it would be something that we'd initiate. It won't happen.
Yeah.
Now, that's been the thing about Google. Would Google be tempted because
they certainly could be, but it's not.
So you're relying on Google's good behavior.
You are, but
Google could use it. I have a language.
We've been relying on their good behavior though, all along.
Right.
We give them so much of our personal data.
Right.
So it's nothing new there. It's just at a larger scale.
I think we have something for next week. 10 minutes on this subject of how proprietary data can be protected and not become public. Because using, whether it's Google or Gemini or OpenAI or Claude, once it's out on the internet, it can be used. And these language models are extremely adept at arranging it, evaluating it, whatnot. So if you absolutely don't want, if you have a line of research, say Lilly or some other format, how the heck do you put it with AWS or Azure and Google and have them absolutely commit that it, or is it the case that everything gets out? Or put another way, defense versus offense. Can anything be hacked? I mean, in effect, that's what Jassy was saying, but that the capability to hack these things is unable to be dealt with.
Yes, I believe that.
It not only impacts us as investors and figure out what the other, it impacts, everyone's data.
Yeah. We've all gotten very comfortable giving away a lot of information.
Yeah.
And we should cover that because that was it. They released a premium feature and at the same time released a change to the terms of service in order to get more data.
Yeah.
Tells you how important this is.
And the people like you and others who are using these mini banks and these agents and whatnot, you're careful to not put social security or bank details and whatnot under the theory that these agents are not completely underneath them.
Right.
Yeah.
Well, this is a marvelous thing for next week, I think. In the meantime, everyone take care. Thanks very much for listening. And we always say, be well and stay healthy. And we'll be here exactly 7 days from now. Take care.
The views expressed on this podcast are the hosts alone and do not constitute an offer to sell or a recommendation to purchase or a solicitation of an offer to buy any security nor a recommendation for any investment product or service. While certain information contained herein has been obtained from sources believed to be reliable, neither the hosts nor any of their employers or their affiliates have independently verified this information, and its accuracy and completeness cannot be guaranteed. Accordingly, no representation or warranty, expressed or implied, is made as to and no reliance should be placed on the fairness, accuracy, timeliness, or completeness of this information. The hosts and all employers and their affiliated persons assume no liability for this information and no obligation to update the information or analysis contained herein in the future and may or may not hold positions in the securities mentioned.